following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this 22nd day of December. And we've got the Dow up 42 at 17,293. S&P's up 4.5 at 2,025. Got the comp index only up 3 at 49.72. A couple of problematic stocks in the NASDAQ, especially the NASDAQ 100. You've got gold down 5 at 10.74. Silver's down 4 cents at 14.27. High-grade copper's back at 2.1. And you've got crude, bouncing 44 cents at 36.25. You've got bonds down 21.30 seconds at 155.13. Dollar is down 22 ticks at 98.14. Very interesting that both gold and the dollar are down. And I just want to show you this chart. This is the 10-minute chart. None of the technicals here other than some arch formations, cup formations, and straight lines. Okay, and left side, right side, price time matching the Chapman wave technique. And we've had another series of peak Ds in the 10-minute E-mini chart, S&P E-mini. And then it ran this morning from 2007 up to 2024. That's a huge move. By the way, we did get the Chapman wave. There was a 2-day cluster of high readings back on Thursday and Friday, and we obviously yesterday was a cumulative spike to the upside late afternoon, twice actually, probably 3 times, but really twice, big moves to the upside. that I liked. And now what we've got is the S&P minis are up 2. They've been all over the show. And I would just put it this way. Right now, if there is a takeout of the last high at 11 o'clock of 2018, that'll start leg B. And then you can start to see a chance to go back into the 220s. Most importantly, and if on the downside, I would just make it real simple. It's at 2017, at 2014, breaks 2014 support, and it says, hey, today's rally could be pretty much over, and we've gone back to the doldrums. All right, and you've got an F/A in the 120-minute chart. It was a nice move. It wasn't a great move. At this particular point, we should have taken out the 229 high. There was that little spike after the big move down. That was at 10 o'clock on the 18th. Was that Thursday, I think? And basically what we're looking at, yeah, that was Friday. And then it continued down very sharply. So this is good, but it's not great. My bias for my subscribers right now is towards the long side, but it's really specific. We have got some specific stocks that we bought today. We have also shorted one today, but we added, and those two are in a category at least for the moment, they're in a category by themselves for a specific reason. So, all right. So back at the story, thanks to all our Tiger hosts that have had fabulous shows all the way through from 8 o'clock. I'll do my best here between 11 and 12, today being Tuesday. Full house today. Tuesday, we've got the swimming team. So if you want to be swimming, if you want to learn about options, if you really want to get that Think or Swim, that really cohesive look at just tying together different aspects of the market while at the same time using particular positions that you can alleviate some of the pressures. These swim lessons are absolutely imperative. So think about that, noontime. And then, of course, 1 o'clock, we've got Steve Rhodes, great show with Steve, I'm sure, coming up. We've got Dave White, the same thing with Dave. You've got Tom O'Brien. What can I say? You just heard Tom O'Brien, so fabulous shows coming up. And then we've got Andy Hector, our commodity specialist, 4 o'clock to 5. Hey, very nice. No, 3 to 5, 5 to 6. Sorry, Andy Heck. All right. And don't forget, I think, I'm not even sure, I should have checked it. I think you've got just another couple of moments here in which you can go to the front page of TFNN. You can go and you can get that donation. You can get Tiger dollars that you can use. They're timeless. You can use them anytime. And they're fantastic discounts, as well as getting, it's really a win-win situation for you, for TFN, for whoever choose to put your money to use, whichever one of the hosts' programs or newsletters you take. It doesn't matter. It's a win-win because you get a tax deduction. So let's just go straight to the nitty-gritties here and do what I was hoping to do. If there was time, and I think there will be time today. I wanted to do, here we go. I just wanted to show you something in the bonds. I spoke yesterday about, that very long-term trend to the downside in yields, and this is an important period. We want to see where the yields are going to go to. But look at this. Using one simple trend line, you've made a peak E already in the daily chart of the TLT, the Lehman 20-year T-bond fund. But if you go to the weekly chart from the 138.50 high back in April, was it? In January of this year, 138.50. I really should put that in. So that was January. I think it was even the first week. Edit. Let me just put that in here. Not even sure. I'm just going to put 7 for now, and then I'll go back and check it. So this is the first week of January, or? No, it was the last week. That's what it was. It even said that. I should have seen that. It moved away from the downtrend line. Okay. So from January at 138.50, there have been a series of lower highs and lower lows until it went down to 114.88, trough E in the Chapman wave. Remember, what is the Chapman wave all about? It's getting you from a buy signal to a buy mode, meaning that the technicals and the pattern that's forming is so inherently strong that it says you should get to at least 4 higher peaks, peak D. At that point, there are other things that can kick in, but it is to get you to that point, and then we need other Chapman wave techniques to keep that buy mode or sell mode in place. In this particular instance, it went up to an E, so it went to the D, and then it recycled immediately, went up to an E, comes back down, goes to a trough E. On the way down, with lowercase letters, we call them troughs. And on the way, wait a minute. Oh, yeah. And on the way down, peaks on the upside, troughs on the downside, and we get to 114.88. And what is that? That's exactly at the 200-period exponential moving average right there. It hits it exactly. And then it starts a brand new A, B, and that B starts to fail. And it creates a single line downtrend right there. And that green dashed, why have I got it green instead of red? Why have I got it always, why do I always do these things topsy-turvy? That's not what you would normally see. Because if you take out that green line successfully and you hold above it, it becomes support and you've broken out. And obviously it's a trend line, so if you get the resistance, which it bumped up against yesterday, so three weeks it's had 2 tests of the trend line, that means that this is resistance. And on the downside, it means that the red dashed line, and that would be in the TLT, depends which week it is, let's just say it's at about 119. A break under 119 sets up 2 things. It immediately says, uh-oh, break of the left side, low. Look at the left side, and that's 118 from the week of the 13th of November. And wait a minute, 116.41 is the 200-period exponential moving average, which was that fabulous takeoff. Wait a minute. Moving sideways is not a bad thing. Sideways is, in fact, if it was in a smaller time frame, you'd see we're in a trend. If it's in a longer time frame, like the weekly and then the monthly, all you can say is so far we're just hanging by the 9-period exponential moving average in the monthly chart, and we are using the whippiness of the up and down sine wave movement of the 9-period exponential moving average. In this case, it's at 122.10. We're using that as a kind of a fulcrum to go up and down and up and down. So I've contended for a long time, I'm going to go to this chart right here, TYX.X. 30-year Treasury bond interest rate. And look at this chart. See, it's the same sort of thing. In fact, let me just draw this. Excuse me. Then I have my T there. Look at that. You've got that same line in the TYX, in the yield, and yet we were looking at the actual price of the TLT a moment ago. Now, wait a minute. Doesn't yield do an inflection of the price itself? Bonds go up, yields come down. Bonds go down, yields go up. Yeah, of course it is, because now we're testing that support level. So the support level, I'm going to say, is red, and this is green, using the same analogy. Now, here's something else. I like to do this, and I thought today we would just talk a little bit about trend lines. We've got kind of slow trading over the next week or so. I think slow trading with a slight upside bias. It's at least the way we're looking at it. Could be completely wrong. We'll know very soon. And in this particular instance, I like to do this. This is the Chapwave Inside Track. And it says anywhere so far, anytime you've gotten close to this green line, it's great to be buying it. So this is the yield. Whoa, buying it to go all the way to the, look at this, new parallel, and make it red, and all the way to the where? I'll make it pink. All the way to the resistance line. That's not very far. That says 29.48, and it should stop somewhere at the 30.50 area, 30.50s, I should say. So, yes, it's the inverted chart formation. This is going in an opposite direction, but it's still stuck in this narrowing triangle going towards an apex. Now, what I've found over the years is that you can keep narrowing and narrowing, you can go to the apex, and then at some point it all of a sudden forms some completely different shape. For instance, if I was looking at this and I was looking and saying, hey, wait a minute, this looks like a very successful arch formation that never even broke the 50% line. But look at this, if it has an arch formation here, we've got very clear parameters that we're looking at. Why? Because in this instance, if the yield starts to break underneath the support of 28.56, I like to, that's tough. Let's go 28.50. 28.50, you're suddenly looking at an arch formation that says, oh, this candle here could be retested. First of all, that candle of the week of the 2nd of October at 27.49, and then that candle of 26.25. All right. Now, what kind of pattern would we be looking at on the upside? Well, on the upside, it's a little different. Why? Because if I was looking at a V-shaped pattern, here comes the break. If I was looking at the V, look, we've already gone sideways. We've kind of broken it to the right side. So I'm going to talk a little bit about what happens in arch formations or cup formations or V formations when all of a sudden you get this extension to the right. What does that mean? I'll be right back. Basil Chapman, Dow's up 44, S&P's up 4.5. I'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And so I wanted to mention that the bonds, as far as I'm concerned, right at this particular time, are just trading in the yields, are trading in a fairly narrow, confined area. And that's at the moment. And we just got to deal with that and say nothing yet. No breakout, no breakdown. It's just kind of stuck. I also wanted to look at Constellation Brands. In fact, I just finished notating it here. I had it notated really well because I was asked about it, I believe it must have been a year ago. I was giving a talk somewhere and someone said, and most of these people they were really not technicians per se. They were interested in technical analysis, but they were really just interested. I don't think they really did anything with it. And one of the guys said, what do you think of STZ? Well, I had just done work on STZ like a week before. I had completely forgotten about it, and I did some work on it. And Constellation Brands, A shares, spirits, beers, wine, trading right now at 139.74. And at the time, I think it was at 80 something other. I'm not even sure if it's split or anything like that, but it was, I think it was a little more than a year ago, October maybe November. I remember saying, I said, well, sir, I've got some short-term signals that are telling me that it should pull back. But you're the guy that got into this thing, you've held it. I didn't know until later on when I spoke to him. And you've been holding it. I'm not going to tell you to get out. I'm just saying on a short-term basis, you might want to take a little bit off and plan to place that back, and I named a number. I remember this very well. And the reason why I remember it is that afterwards he spoke to me, and now I've met a bunch of people like this. Oh, in fact, I just remembered I spoke to someone else there that day as well. This guy said, oh, I've owned this for years. I just keep putting money in it. In fact, I'm a I don't know what he was. He did some contracting. I don't know what he did. He did something completely different. He doesn't have time for all this, and he never sells. He only buys. I thought, hey, that's the technique that's really stood you in great stead over the last few years, right? I'm looking at Constellation Brand now for one reason. I just happened to see, as I went down and looked, put on the TV last night, I looked at, lo and behold, there's Kramer, and he has a guy on, and this guy's talking about something, and I see a whole on the little table, I see a whole bunch of booze bottles, and I'm looking at this, I'm saying, oh, wait a minute, hey, that looks like it must be Constellation Brands, STZ. And this guy, the CEO, I think he must have been, he's talking about this is the top, and 40%, and no one's near him, and he's talking about this. Oh, geez, I said, Constellation Brands must be skyrocketing. I mean, this guy, there's nothing that he's done wrong. And I looked at the chart, and absolutely, last month the high was 144.60, and this month it's 144.84. It's setting up a Chapman wave 2-bar reversal potential in the monthly chart. The technicals, the MACD is still very strong. The stochastics at 91% and flat. Monthly chart says, hey, nothing to see here, folks. Just move along. But then you get to the weekly chart, and it's very bumpy in the technicals. The stochastics at 81%. The on-balance volume has screamed higher. In a very short period of time, it's up near its highs, the highs that it was when it was at a peak E back in April of 2015, at 121.92, also with a 2-bar reversal. There it took time. It only pulled back to about 114, 115 from that, what did I just say, 120, 121, 22 area. And it had another little pop to 122.13. So that makes the Rogue Wave F. Then it pulls back. Then it starts a brand new move. Why have I got it? Oh, that made a lower low. And what did it do? It screams. And that actually could be, yeah. And then it screams ABC, and it goes to a peak D. And there's that 2-bar reversal. And now it's starting to struggle a little bit, but the technicals are only beginning to weaken. All right, so where are we? Monthly chart, fantastic, with the potential for a doji candle right here, but other doji candles have just been halfway markers to the next move up. But wait a minute. The stochastics at 81% and very close to breaking under 80%. 139.72 is where it's at. 138 is the 9-period exponential moving average that it hasn't closed under since it snapped under it once in a week of October the 2nd, but the only time it's been under, even the week of the 24th, August the 24th, it spiraled down to 114.49 and then closed up at 127.94, a point, less than 50 cents off the high, less than that even, of that weekly candle high. So the last time it was under it was way back in July of 2015, back at the 119, 116 area. I think it's worth talking about this because there are a lot of stocks that are exactly in this situation. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman. So now we are looking at the SDZ, and this is Constellation Brands. Excuse me. And we're looking at it with the Chapman Wave projections. And the resistance at the 143.39 to the 144.90 area is very strong. And where did we go to? We went right to 144.84 and 144.67. It's pulling back. The daily, the 10-minute chart had 141.43. It spiked through that, but didn't close. It closed below. And 140.12 was the support. And you had 143 as the 120-minute last resistance right there. And what was that one? 142.81. And now we're looking at 137.74 as key support in the 120-minute chart. Nothing much in the weekly, just 141.81, and it broke that, but it's now below it. Nothing in the monthly. That's very interesting. So I'm looking at this and I'm saying, okay, you've got a series of 143, 144 resistance points. And what was the high back on the 4th of December? 144.84. Let's put that in. 144.84. And we're looking at a spike down to 135s, and then it pops up to the 143, is that it? 143.44 level on the 17th, and now it's come back. So now what we're looking at, in fact, I would prefer to even put this as a potential oval formation. But this is the oval formation that says, no, you've already taken out that low, so you've got to look at this as a potential arch formation, right? There's a chance there could be one more spike to the upside and then it pulls back. But this particular low right here was a little too low. So I'm looking at this and I'm saying, okay, let's look at the 120-minute chart. The 120-minute chart has the same asymmetric, no, it's a symmetrical triangle. And it says very clearly that if it takes out 139 support, this is a very near term, then there's a good chance that 138.21, the 200-period moving average, will be tested. And if it spikes to the upside, it really needs to take out that peak at 11:30 on the 17th or 143.44 to say, I'm going all the way back to test the top. So there are a number of charts that I've been looking at that are just like this. In fact, look at this. Look at the RTH. And you wouldn't think so, looking at so many of the retail stocks that have just been hammered. Look, this is a peak G, possibly an alternate account C. But look at the spike, the gap down. I couldn't find the reason for the gap down yesterday. I'm not sure what it is. But what's most important is that it was an all-time high just a few days ago. Leg D in the Market Vectors Retail ETF. And wait a minute, the MACD is it's poor. I should be putting a down arrow immediately, but I can't because the stochastic's still at 83%. That's internal strength. But no, that's residual strength. The internal weakness is showing up in the MACD. We've seen it before where you've got a peak D and then a gray A right there. This is peak D, and then a gray A underneath that peak D. And the MACD was turning down, and then all of a sudden it held the 9-period moving average and started to scream to the upside. I'm looking at this, and I'm saying, Walmart, Home Depot, Amazon, CVS, Lowe, Costco, McKesson, Target, TJ Maxx. It just goes on and on and on. Macy's, just a whole bunch. Bed Bath & Beyond, AZO, it has AZO, and AZO's had a terrible time. That's AutoZone, Staples. I'm looking at this and I'm saying, wait a minute, this is very toppy. And that's the RTH. And that's the reason why I want to be selectively long. We are actually long the Dow. I want to be selectively long. And I want to try to isolate what I think is working together with what I think is not working. And for the moment, rather than looking at major trends, I'd rather play a short-term trend in the indexes or a particular index and specific stock recommendations to try to be balanced with longs and shorts. Not quite balanced right now because we lost a short this morning. I made the stop just a tad low. I don't know why I did that. Jeez, sometimes you do the dumb things. As I did it, I misread it, actually. That's all I did. I misread it. I brought it down a point, and we got stopped out, and now I'm going to have to go back in because I think this is one of the very weak sectors. So I'll be back. So that's not the issue. The issue is RTH. This is looking to me like in January, we could see a pretty good pullback in the RTH. So I want to just try to rally, see a little bit more upside, finish that upside, and then we want to be looking very closely to see, is there more upside potential in January, or is January going to be a big consolidation month? So I had a question in the den, COH. Terry wants to know, I used to have a Coach. You see, Coach is high end. Coach is high end, and what the heck do we have? So on a short-term basis, I'll answer your question, and then I want to put it into the context of Tiffany's and Coach and Rolls-Royce, etc. A, B, recycle. No, it's a C. It should go higher. I think that Coach, on a very short-term basis, at 33 is looking at 33.18 is the 200-period exponential moving average. You know what I'm going to do? What's the time? I'll do this live right now. You look for the lowest, most obvious low in the Chapman wave methodology. That starts you off on usually it's a plus. I'm looking back. I can obviously put an up arrow. It would be stupid to put a plus because I know it's gone higher, much higher. So from the low in the 27s, I'm putting an A and a B, and that's also a little AB, so there's an overlapping wave. This becomes almost an A and a B, so it's a double overlapping wave that goes to a C, and that suggests that there should still be a D to come. And that D to come is indicating Now let me give you the context here of the bowl formation right there. So I'm taking it, I'm going to go all the way to there. I'm going to go to this candle right here, all the way to there. I'm going to do a left side, right side price time match. I'm going to, actually in this case, I'm going to the bottom. I can't because it's already past there. So I have to go to that high. Okay, no problem. That's exactly, it's the technique that we can use. Right there. One more. Now look at this. I'm going to give it one more parallel, and this one I make green. And all of a sudden from the right side, we've got a move that says it can go into January. No, December, yeah, early January, first week of January. And then what I want to do is I want to give you from here, I have to give you where this goes to, and it goes right there. Okay, now I have to also put format, move space to the right. I'm going to give it 13. Okay, here we go. So this is all done. And this is saying that, whoa, that is way too far. When I've done this in such a way, I say, no. No, you can't do that. You have to be very strict in this case. So give me a second. I'll talk it out because I don't like silence when you got radio. So here we go. I'll do another one. And this one's going to be a little bit too, this one means that we've already broken time-wise. So there you are, right there. Oh, today, it's exactly to the plumb line of the low of the 29th of September, 2722. Today is the day that it should try to get to between, let me just give you that number, 3386. What's the high today? 3308. Oh, the day's young. We've still got room to go to a leg D if there's going to be a nice spike to the upside by later today as the fund managers get really restless and say, I can't stand this. I've got to do some buying right now. So what is the Dow? Oh, the Dow's up 82. S&P's up 9. You know, what can I say? It's at a time like this, you just have to turn around and say, I've got to stick with whatever techniques I have, because if I don't, I'm just out in the wilderness. And that's that technique that says there's a bowl formation. It says that Coach could have a pretty good season here, and it could spike to the 34, 35 area. It could go high. I'm just saying that would be the left side price time match. It would extend it by a bit. If it doesn't do it today, it could go a couple of days later. But that would be my target. So the answer, Terry, is that your support is at 32.23. A close under 32.23 says, uh-oh, I'm stalling. I don't know if I've got the strength to do it. But believe me, if it holds anywhere where it is now at 33, between 33.06 and 33.15, if we can get to there, that's going to be really good. If it goes above that by the end of the day, that's very good. And that would imply that you've started leg C extension. So this is A in the weekly, B, and now we're in C, and any move above 30, what did I say it was? 33. Yeah, anything above 33.45 this week extends leg C. I wouldn't say it's the most exciting chart because the monthly is still very ugly, but the daily is good. Now let me look at this. I want to show you something. RYCEY. I hope I've got this right. I've practiced this for the last 6 years or something, and I can never remember it. I've got it right. This is Rolls-Royce. Look at that. It looks like the Coach. Doesn't it look like Coach? You remember the Rolls-Royce also has Coach. How come it isn't all notated? I always notate this. A, B, C, D, E, F. Made a peak F top back in December 13, 2013, January 2014, and it's just been plummeting. I wish there was a Bentley, because Bentleys are selling. You just see them all over the show in the major cities and major suburbs that are the upper end. Rolls-Royce, not so good. Coach, having a nice rally, and I think it portends well for the coming 3 weeks, say. Let's get back to the RTH. Why the RTH? I'll tell you why. I still haven't figured out. Someone might tell me which one of these stocks had a huge gap down that impact. Oh, we don't have CMG here, no, because it's a retail market vectors. Ross Stores, no. WFM or Whole Foods, no. I don't think Whole Foods did. If anything, they should be benefiting right now. Yeah, they're looking good. Peak D has gone to an E. Yeah, you remember we said from Chicago. Richard was from Chicago. Said, hold on, don't short Whole Foods just yet. And it's looking quite good. And this is the reason why I wanted to lean towards the long side. I'm seeing enough strength in these. How can I call even the RTH in the economic areas that pertain to this season, and that might help just go in for another couple of weeks of upside move before they start to come back down. So Whole Foods could be one of those. We'll see. And let me put an E right there. All right. We're looking at, and Walmart, this is very interesting. When I was at, where did it disappear to? Oh, that's where it is. When I was at Walmart, not recently, I guess just before Thanksgiving, quickly going to get some of those things that are needed for grandkids. What I'd noticed was it was a lot quieter than I've seen it ever before. No, I didn't go to Walmart. I went to Target. I don't even think about Walmart. We don't have one near us. Yeah, it was Target, not TLT, TGT. Yeah, look at that. I'm shocked to look at this chart. Target trading at 72.45, up 74 cents, but just stuck at the lower end of its range. It made a high back at 85.81 in June of this year, and then plummeted in November down to 68.15. That is a plummet, 17 points. And now it's trading at 72.43. This is not good. So this is a very selective move. I'm looking at a selective move all over the show. Look at AZO. Horrible chart. Used to be one of the very best. AutoZone looks to me like it's making a hat-trick top. Look at AAP. That's American Auto Parts. Peak F top. Slumps, gaps down. Hasn't even gotten close to filling the gap in the 180s. Trading at 149 after making a high at 201.24. Orly trading at 253, down 42 cents, having made a Chapman wave 2-bar reversal at 277.96 and 277.66 way back in October. I think it's a hat-trick top as well. So that's very interesting. Hey, maybe the auto companies are moving today. Oh, look at that. Ford is up 39 cents at 14.12, stuck in a trading range here, and GM is, after looking horrible under the 200-period moving average, just gapped up. Oh, it's an island reversal, or very close to an island reversal at 34.28. So nice little sign of momentary strength here. Weekly chart is holding quite well. Not great, but the technicals are holding quite nicely. Under 32, it's in trouble. At 34.29 right now, it's in the middle of, it's in the lower end of a range. But if it can buy Thursday, half session, Thursday, if we can get to 35.16, that'll be very good. All right, so we've got the Dow up 78, S&P 878. Let's look at our chart right here. And there it is, leg B. Oh, my goodness, nice technique. I'll be back straight after this break. Basil Chapman, Tiger Technicians Hour.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and I guess I got to this chart a little quick. Especially with someone like me who likes to move really quickly. I always get the complaints from a couple of people in my service in tennis that I don't really wait around. I'm standing there, and the next minute, bam. You're not ready. And that's the same thing. So my wonderful engineer just told me that I was a little too quick. So sorry, Al, and I hope this is a little bit better. Let me just draw this in here. So this would be the target that we'd be looking at. There's a lot of work to be done to get your leg C and then maybe a leg D, but it needs to hold, the E-minis needs to hold the 20. I don't think they should go lower than 2017 before trying to break the high of this bar of 2075. And we'll be looking at this closely. But so far, the pattern's been working quite nicely. And so that's the chart. All right, let's get out of that. In this last segment, there are a couple of things I want to talk about. I have an appointment tomorrow. I've been trying to change the time. It hasn't worked out. So I just don't know if I'm going to be back in time for the show tomorrow. I really can't promise that I can rush to get back. I usually do rush to get back and always make it, but this time it's it's going to be a little difficult to get here for okay. So what we're looking at here, this is General Motors. Nice move down, holding quite well. There are just enough stocks that can help this market. I'm not a raging bull. I am bullish, but I'm not a raging bull. And I believe me, I'm prepared to move to the downside. Downsides are real quick. Love downsides. So this is going to be just slightly highs and slightly lows. That's what I'm thinking right now. So let me just do this. The VIX index, make it real simple. The VIX has dropped to 17.51, down $1.19. I think that this is telling me on a weekly basis that a Thursday, remember Christmas Friday, Merry Christmas to all of you that's celebrating. What we're looking at here is that if the volatility index closes again, as it has done so often after a big green candle on the upside, but closes again underneath the weekly chart, right? $18.41. Let's make it a round number. Let's call it 18.40. And it's trading at 17.47 now, and it's only Tuesday, so there's a lot of days to go. If it actually closes underneath it, but if it closes under the 200-period moving average of 16.90, this is just suggesting that there's enough residual strength in the market to rally towards, not to the high, but towards recovery highs going into the last week of the year. If, in fact, for some reason, there's just bad news or just things are received very badly over the next few days, and the VIX suddenly spikes, if it goes back into the high 19s, but especially if it's in the 20s and closes in the 20s on Thursday, that's just suggesting you've got to be really careful that there is extant buying of the insurance of the volatility index, and there's a lot of internal weakness because the market isn't able to sustain rallies. So I'm in the camp right now that says there's a better chance that the VIX is going to pull back a little bit more after that big spike to the 2681 area for really not all that much of a reason. I'm not even sure quite why it went that high, but it did. And that's suggesting to me that there could be another weekly failure, and that failure would be transmitted into the monthly chart, and that monthly chart has the 9-period moving average of about, it's been covered right now, can't quite see, around about 1790. So we've got about a week, just over a week to go, and what we're looking at is on the purely technical side of the market. Let me just really do this quickly. Here we go. INDU, the Dow, working hard to get even to the 17,400s. To me, that's absolutely critical. It's that repellent area is just so important. The IWM, not doing all that well, failing horribly. The NYA, that's why it's a very selective move. You've got to be very selective, and you've got to be prepared that at some point you're going to be switching to the short side, I think. But in the meantime, we'll see how far this can go. I'll be back with Tom later today, and have a great...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.